Hey, Job here. On this channel, I invest 100% of my income and live out of my Robinhood brokerage account. Today, we're celebrating a huge milestone for the portfolio and strategy. I've been doing this for exactly a year, since the end of May 2025. Honestly, feels crazy to finally say it and to have reached this point, like a full year of investing my full paycheck into growth and high yield ETFs, generating monthly passive income, and living out of my brokerage by paying bills with margin. Yeah, it's crazy looking back, right? Like I mentioned in my very first video, I started dabbling with high yield ETFs originally to help safeguard against potential layoffs due to the volatility in recent years in the games industry. Kind of honestly really had me on the edge of my seat a lot of the times, and I felt like I needed to do something about it. And that's why I kind of really started just messing with high yield ETFs and generating income, just help cushion things. And really that came into practice as people that have been with the channel saw earlier this year. The layoff that I feared and I was preparing for ended up happening with my last job. And really that passive income that I've built up over the last year and a bit really cushioned the blow of it, right? And with that too, like I really started going heavier into margin to kind of help potentially also accelerate my early retirement plans as well. Like originally I was kind of aiming for an earlier retirement at 45 years old in my old growth strategy. But with margin, I was hoping to maybe even potentially accelerate that 40 years old. But yeah, for those that have been following for the last several months, yeah, you've seen how the portfolio ended up weathering that layoff and how I've kind of ended up even stronger after it. And you've seen how like the portfolio has kept growing through the ups and downs of the market, no matter what I was doing. I still kept investing through the lows, through the highs. And yeah, today we'll look back at all that, right? We'll talk through the original inspirations for kind of starting the strategy, all the numbers comparing May 2025 to May 2026, big lessons I've learned throughout the year, and all that good stuff. As a reminder, you can always check out my portfolio for yourself with a free snowball portfolio link in the description below. And if you appreciate all the transparency, give a like and subscribe. As usual, just a quick disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor, and nothing here should be taken as financial, investment, or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, and yeah, just make sure that you read this full disclaimer. As far as the weekly flow, yeah, I'm not gonna go over it. You can kind of pause and check it here. But yeah, and this is the flow chart I use to invest 100% of my income and use margin to pay down bills and live out of the brokerage account. If you want a full breakdown of it, check out the video at the top right. And without further ado, let's just jump right in. Yeah, if we pop over to Robinhood to kind of see the live portfolio, this is where we ended up on Friday at the end of the day. So we can kind of really see the portfolio ended up at $230,850.28. That's including some after hours. And yeah, really, if we look back over the year, really missing some history here from when I was before I was in Robinhood. I was originally in Fidelity, but you can kind of really see how, yeah, over the last year I'm up 32.56% or 56.7K. That's with dividends included, right? So yeah, huge gain, especially in the last several weeks here with the big uptrend in the market. But yeah, throughout, I just kind of kept investing and yeah, just did my thing. And like, even if we check over in Snowball, right, pretty much where I started, right, over here in May, was outperforming for a good chunk of it and then was not performing for a good chunk of it here. And it's really bounced back in the last little while. And yeah, the key is that I'm still investing every day, and that's what's kind of enabling it by generating so much passive income like I am every month, and then also just using margin to pay my bills. Like it just has me that I can invest my full paycheck and really just kind of keep my compounding going. I'm never interrupting it. I'm never selling any assets to take out of the brokerage. I'm just using loans against my growing asset pool to really live my lifestyle, right? And really some of the big original inspirations for the strategy, one of the original ones, so not quite the strategy as a whole, but at least the idea of living on margin, right? Came across Todd's channel, Unconventional Wealth Ideas. And honestly, I had a hard time understanding a lot of like how he was doing it. And personally, I didn't want to buy into the ebooks and the e-guides to really dive in. So I was just kind of watching those videos out of pure curiosity. And I was just like, how is he kind of actually doing this? And then where it kind of all really came into focus is when I landed on Paycheck to Portfolio when he first started his channel all the way back in May last year, right? With that first video. And yeah, and I think that kind of like clicked two and two together as far as like how Todd was pulling that off. And yeah, that really got my gears going. And yeah, I think like the key thing is that like at that point I was kind of dabbling with high yield ETFs already on my own, and yeah, just with margin. And in 2025, I'd already kind of stepped up my investing to 50% of my salary at that point, just to kind of really mess with things. So that was up from the 30% I was previously investing in previous years, essentially. So yeah, just felt like another bigger leap to really be going to investing my full paycheck and actually living on my brokerage and paying bills. And yeah, after watching Sean's videos here on Paychecks Portfolio, I was like kind of running all the projections, and yeah, it just seemed like it all could work and it made sense. And I think like really one thing that really kind of gave me more confidence and kind of more understanding, especially with the margin piece of it, is Eugene Vasquez. Yeah, in particular, this one video over here, how he used margin to buy high yield ETFs that make him 60K a year. This really broke down the kind of major concepts of margin and margin buffer and equity and stuff like that really nicely. And then, yeah, I think that was the missing piece that really, yeah, just made everything click into focus as far as the margin. And yeah, and then as I ran projections and ran my numbers, it just kind of gave me more confidence to really take the big leap. I kind of started by honestly paying for a couple of weeks, just paying some smaller bills, like an internet bill that was $120, and paying it straight out of the brokerage with margin. And then after that made it so that like I could invest, I was doing like 5K a month at that time. So instead of 5K, I was doing a 5.1K because my internet bill is $120. And yeah, and as I kind of understood the numbers and margin and stuff like that and saw how that all moved, that kind of gave me more understanding and more confidence to really make the leap. And yeah, and that's where you saw it when I made my video in summer last year. That was a couple months into it, but made the leap where I was investing my full paycheck, any cash back, any business income, everything, every penny is going into the portfolio now. Yeah, no pennies gone to waste. None of it gets used to pay bills. Yeah, it all gets invested. So really paying myself first in the very real sense of the word, right? And yeah, and then after bills get paid with margin, and yeah, that's how I kind of essentially live out of the brokerage, right? And also my dividends kind of deposit the cash and margin that keeps replenishing it every week, every month. And yeah, if we take a look at the numbers, if we pop over to my sheet here, you'll see the top line numbers since I invested, right? I've been kind of keeping track of this every month. So you probably see this in my monthly portfolio updates. You can kind of really see it here. So added the last line here for the month here of May. So you can kind of see that I started out over here in May last year, right, at a gross value of 205.8K and a net value of 117.8K. Margin equity at 55% at the time, available for withdrawal 31, margin buying power. And you kind of see how that's all progressed since then, really. And at that time, I had like 4.6K of monthly dividends. And yeah, it's just kind of progressed from there. You can kind of see how the monthly gross value has grown and grown every month because I'm just, all my income's going in, right? And then there's some months that it dipped just along with the market, right? So whereas ones that are dipped here, like yeah, back in November, for example, but just kept investing, you kept buying those dips, right? Just so the eventual jump up, you catch it. And then same for in March here, where it dipped down to 314,000 and 147.7K, right? But kept investing. And then, yeah, we've had the last several weeks, just a crazy run up. So that ended me over here at a 411.7K on 230.1K. Margin equity actually stayed stable when you look at that, right? So, but from where I started to where I am, which is nice. It kind of went down because I was kind of pulling a lot more in margin in the earlier months, and then kind of stabilized over time, and the market equity has been steadily climbing. Same for my available for withdrawal. So this is cash I can withdraw from the account, right? Just steadily climbing. So you can kind of see all this in like the charts, right? So gross value just kind of growing and growing. Yeah, net value as well. You kind of see the big upswing there. Margin kind of steadily growing. So like the key thing is that my margin is stacking, right? Eventually, it'll reach a point where my monthly dividends will exceed my monthly expenses. And that's when any excess will kind of go towards paying down margin. So you can kind of eventually see this eventually come down a little bit more. We're kind of a couple of years away from that still. And yeah, you can kind of see how my margin equity and margin buffers have evolved over time here. Yeah, margin buffer has had a big run up here with like the run up in the market. And you can kind of see my monthly dividends too. And yeah, from May to this May, there's a little bit of a gain there. But you've seen how like my dividends grew quite a bit just because I was investing in some very high yielders, but kind of saw the issues with that as far as like NAV erosion and yield erosion. And we'll talk about that a little later. But yeah, kind of see that. But now, since I kind of rebalanced everything and kind of really focused on safer yielders since the beginning of the year, you can kind of see how stuff has been steadily growing a lot better compared to it was last year. Like last year was a lot more sporadic. And yeah, and then if we pop over to Miro, kind of made a little section here. So yeah, when we all said and done, where I was at the end of May 2025, like I said, 205.8K, 88K of margin balance. So like that's what I was saying. I was already kind of messing with margin over the last kind of year and a bit before that, just for different things, for some good, some bad. But here I was I was messing with high yield ETFs for several months already. So I was kind of stacking a little bit of margin there. And yeah, my net portfolio value was 117.8K. So people always ask me, it's like, oh, what would you start with? And I think like that number is going to be different for everybody. Everyone has different monthly expenses, different goals. For me, this is what I felt comfortable with making the jump, just because, yeah, this was already kind of bringing me like 4.6K a month at the time, right? And then, yeah, that was about half my monthly expenses, right? And that's where I felt comfortable making the jump and kind of still stacking margin. And from there, where we ended is 411.7K in the gross portfolio value. So that was, I pretty much doubled my gross portfolio value in the last year with all I contributed, right? And how it's grown. My margin balance has grown as well. So 106.33% or 93.5K. So yeah, this has grown quite a bit just because like all my expenses are going through my account. Like I mentioned, I'm living out of my Robinhood brokerage account. All my bills get paid on margin. Essentially, what gets put on the margin balance is the difference between my monthly expenses and my monthly dividends. So just because, like, say 9,000 comes out, then I get, say, 4.5K in dividends. That pays that down. So there's only really 4.5K that gets added to margin at the end of the month. And my net portfolio value ended at 230.1K. So that's 122.3K in gains and contributions, right? Or up 103.78%. So huge doubling of the portfolio overall across the board, right? And with all that, between all my contributions, so this doesn't include the dividends, right? This is just purely all my paychecks, all my side income, my cash back, rent income, tax refunds, bonuses, everything went into the portfolio. So that was 161.2K in contributions. So a lot. So this is, it's crazy because like previously, what I'd be investing would be like 3,000 a month, right? So 12, so that'd be like 36K a year that I was doing. So basically, when I look at that, that's like 161,253 divided by 36K. Putting that into perspective, I've basically invested 4.47 years worth of what I'd normally invest when I was investing 3K a month. That's huge. And really that's being enabled by just all the dividends I'm receiving, right? So in this year, I've received 60.3K. And because of all the margin I'm holding, right, there's a lot of margin interest that gets paid monthly, right? I track that on my spreadsheet. So right now I'm kind of sitting at 677 a month that I'm paying for all the margin that I'm holding. So that resulted in the last year for 6.9K of margin interest that I've paid. So what's nice is that like, this is all the income I've made from holding all that leverage, right? So really that's a $53,386 positive spread. So honestly, for me, I feel like that's a good deal where, yeah, I paid 6.9K to make 60.3K. Pretty good. And yeah, that's the big numbers, right? Yeah, it's kind of crazy looking at this. I wasn't planning on doing this, but kind of doing it on the fly now. It's crazy to see that I've basically invested almost 4.5 years worth of income in the last year, which is just crazy to say and to look back on, right? That's like quite a bit. Yeah, it's game changer, honestly, and why you can kind of see how this accelerates so much. And you're just not interrupting compounding, right? You're just kind of letting things run, letting the miracle of compounding, let it kind of do its thing, right? Across both the growth side of my portfolio and the high yield side, right? And I think the thing is too, is that like, if we check into like my spreadsheet here, so like I mentioned, previously my strategy was that I wanted to retire by 45 years old. And I had a pure growth strategy, fully pure growth, but growth and dividend growth, because I still had SHD. It's one of my OGs. But I had mostly had stuff in growth. And yeah, I was investing $3,000 a month, which was great. So about 30% of my income at the time. And yeah, really, if we look at the point that I would have projected myself to be at, gross value wise, is 272.9K if I kind of kept that up, right? And yeah, look at the difference, right? And 411.7K versus 272.9K. So That's why like investing 100% of my income is just really a game changer, right? And originally the plan was for this old strategy was to retire by 45 years old and grow my portfolio to this kind of like 1.4, 1.6 million portfolio value, then sell all of it and put it into, at the time, because I came up with this plan back in 2022, invested into a 10% yielder, because this was like when JEPI and JEPQ were the only thing that was pretty much there, and kind of QILD, XYLD and all that. And yeah, that would have given me roughly my salary that I'm making today, right? But really, I kind of had other plans, and with the volatility in the industry, I wanted to front load my retirement to 40 years old potentially. So yeah, and even here, like if we look at my projections, right? So these numbers are updated as of today, those same numbers that we were talking about. If we look at that same timeline, 40 years old here, potentially with the strategy, I'd be at $1 million in gross value, potentially at 687K in net equity. So yeah, this is gross value too that I was calculating here. I wasn't kind of calculating the net stuff, but you can kind of see the difference there, right? Potentially at $1 million at the same time period with my old strategy. At 45, I'd be like at 1.4, 1.6. And then here, potentially, I'd be at 1.8, potentially. So yeah, some crazy difference there as far as the projections between both strategies, right? And this is, when I ran those numbers, that's really what kind of drove me to kind of switch and I really take the leap and invest 100% of my income there, right? And you kind of really see how that's tracking against the old stuff. And yeah, that's why it's kind of nice to kind of keep this in mind, these old numbers, just as I kind of look back on them. But yeah, that's the numbers. Yeah, just crazy to look back on this. This is just awesome to see, honestly. As far as kind of lessons learned, I mean, first things first, like NAV and yield erosion are definitely a thing, right? I made a video about that early on. I probably need to reshoot that, just a revisited one for 2026. But yeah, it's definitely a thing I should pay attention to. Yeah, I went really heavy into the ultra yielders last year, right? Like so YMAX, Ulti, things like that. And yeah, I was at Misty and Vidi and a bunch of the really high yielders, right? And anywhere between 40 to 70%, even 100 sometimes. I mean, really through that time, and especially through the downturn we had in November, I really saw firsthand how those can kind of really erode in NAV and then also in yield. I show this every week as far as like the dividends, right? You really see how like for Ulti and YMAX, for example, for all the capital I have invested, right? So week on week, I'm generally yielding 64%, but for all the capital I have and how much the price has gone down, like really for like the 25.2K I have in Ulti, right? That's yielding right now 41% roughly. And for YMAX, that's actually the 53% yield every week is actually more closer to 35% yield for all the capital I've invested, right? The book value. So yeah, the yield and NAV erosion for those are very real. You can kind of see it that there, right? These are in the red, but everything else, like all these safer yielders. So everything in the core here are actually kind of pretty stable. And I've been doing these for the last several months, so they're a bit newer than Ulti and YMAX. But yeah, and that's the big reason that like in the new year, after kind of seeing all the results of that since I started the strategy, I really refocused on kind of like the core here in the middle. So like anything in the 10 to 20% range, they hold their NAV a lot better. They hold their yield a lot better. So it's a lot more of a stable base to build a portfolio off of. But yeah, at the end of the day though, like I don't necessarily regret investing in like Ulti, YMAX and whatnot. Like I definitely sold out of Misty as well. And I'll touch on this in just a second here. But yeah, because at the end of the day, these are still kind of buoying the monthly income quite a bit. And yeah, I'm okay with their caveats and their issues with them kind of slowly eroding. Yeah, I'll keep collecting their dividends and I'm just not investing in them as much this year. Yeah, I've only done maybe a couple thousand, nothing too crazy this year. But yeah, at the end of the day, like when I had my layoff in February, right, I was kind of very glad that like these two were kind of shoring up a lot of my high yield income, right? And that's a large portion of what was giving me the 4.6K a month during that layoff, which is nice. And I had less, had I had like half that, say, if I didn't have these and they were invested in some safer yielders, right? I think I would have been in a trickier spot with the layoff. So like, I like that I have the mix of some of these ultra yielders, but also like now a bigger core even really of safer yielders here, right? So this is kind of growing more. So this should eclipse this overall as time goes on. And then, yeah, another thing that the layoff taught me, and like I kind of touched on this in the last video. Yeah, it's good to like kind of take another look at your portfolio, right? And kind of do the thought exercise of like, would you still hold a lot of these positions through market volatility in a worst case scenario where you lose your job and you can't invest as much or at all like you previously did, right? Like, I think that the layoff for me really brought home the fact that like, yeah, I had a lot more volatility in the portfolio than I needed. I had like some funds that were like basically leverage on leverage. I'm already using tons of leverage. And then I had like Upay and Misty, which was a leverage play on Bitcoin, GOW. And then also their margin maintenance ratios were higher, right? And yeah, I just realized that like, given that I didn't have as much income coming in anymore, just the unemployment, I just didn't feel comfortable kind of with those swings and the volatility. So I actually kind of made the hard choice to kind of sell a lot of those, right? And I kind of realized a lot of losses in the process too. And also like the big thing I did is also sell out of my single stocks, right? And now I purely just hold ETFs and baskets of stocks. Some of the exceptions are kind of like the metals and Bitcoin and whatnot. But as far as kind of single stock tickers, those are kind of all gone in the portfolio. Just kind of sticking to ETFs for now and basket of stocks, like at best, like DRAM, right? Which is like a very, very specific sector ETF. But yeah, I think I've been sleeping better since I did that, honestly, and I'm probably going to stick to it. We'll see. I might not fully off the table to never invest in single stocks again. Never say never, right? But yeah, I've been liking this, honestly. And yeah, I think like that's a worthy exercise for people to run, really. Really, the big thing too is that all my positions now are 25% margin maintenance, which is nice. So that gives me the best kind of margin buffer, the best equity that I can have, right, as far as margin health goes. So put me in a better position overall for the long term. And I think that's one rule that I'm going to stick to for sure, where, yeah, I'll just going to stick to 25% margin maintenance names now. Nothing above that. And that's one thing that's nice in Robinhood too, because that it goes down all the way to 25%, like Fidelity, Schwab, E-Trade, stuff like that. They actually cap out at 30% and then go above from that. So yeah, nice lower floor here on the Robinhood side of things. And then another thing is that like, yeah, we saw through my taxes this year. If you have things like tax deductions, right? Mortgage interest deduction, property tax deduction, HELOC interest, margin interest deduction, carryover losses, side business deductions, fee as well. A lot of that will help offset the taxes that you'd owe from all the new dividend income that you'll have, right? So what was nice is that last year, despite making $52K in dividend income that was extra, I actually got a $4.2K tax refund after all that. So yeah, I know not everyone has this and is in the same position to get that, but if you're able to, I think that really helps. Again, not a tax person, but this has worked out for me pretty nicely. And been pretty happy with it. So yeah, that was a pleasant surprise this year, kind of getting this refund, right? You definitely see the difference between the one last year and this one. So definitely an 8K difference. So some of that went to kind of paying those off, but still a refund at the end of the day, which is nice. Another big thing is hypothecation. Yeah, I made a whole video on that, right? So definitely check that out if you have a chance. Yeah, I have this video here, right? That's something that any brokerage can do when you use margin, not just Robinhood, right? They can lend out your shares. And this is different from the official share lending that most brokerages offer. So that can kind of strip your ROC status from certain dividends and up to a certain percentage, right? And give you substitute payments instead, which is all taxed at ordinary income. So really something to watch out for. I really break that down in this video. Yeah, I ended up having like roughly 54% of my dividends that became substitute payments. So it affected my things for sure. But yeah, that's definitely a caveat of using margin, right? Something that's in the fine print that most people miss. So definitely something to look out for. And really, like at the end of the day, the biggest thing with the strategy though is that like this strategy can kind of really work, and it really worked nicely for me this year in my personal situation with like kind of my goals and expenses and income, right? Yeah, I think I'm showing this every week how I'm really living and breathing this whole kind of strategy, and think like these numbers at the end of the day really speak for themselves, right? Yeah, like one thing we forgot to go over is that like total profit wise, right? So this includes realized gains, dividends. With margin, like I'm up 99.2K or 43.14% in total return. Realized gain loss, 28.4K or 12.35%. So green on both sides of the board, really. Definitely less so on the unrealized side, and especially this run up in the last few weeks has definitely helped. But yeah, if we take a look at that on the growth chart, right? Yeah, if we can kind of compare, we can kind of really see how that's worked out, right? Yeah, so compare it over here and just look at the year. So really in like the same time period in the last year, in total return, I was up 45.02% or 71.5K. and the S&P was up 29.43% or 47.5K. So yeah, this includes capital gains, realized P&L, dividends received. Yeah, this is even minus my margin fees as well too. Doesn't have all the ones captured here. It's missing the Fidelity ones, but yeah, you can kind of get the rough idea there. And yeah, awesome to see how that's worked out, right? Yeah, and kind of see across all the positions how it's done over the last year too. Not all of these I've held for a year, but you get the idea. So I think really all these numbers speak for themselves. Yeah, super happy honestly with how it's all gone over the year. And I really appreciate everyone that's followed me along on the journey. Like, I hope you've had as much fun following along with me as it was for me to transparently show everything over the last several months. Really happy with the little community we're building here on YouTube, on the Discord. Shout out to everyone that's on there, right? Yeah, just a lot of great conversation that we have. A lot of different people living out of their brokerage in different ways. So lots of ways for people to learn from each other, which is awesome. And yeah, and then tomorrow we'll kind of conclude the 1-year anniversary celebration by going over the usual weekly portfolio updates. So really ending May 2026 with a bang. So yeah, here's to 1 year of kind of doing this strategy, right? And also after all this, I'm curious to hear of any questions people might have about the portfolio, the strategy, anything really about the numbers that I showed. I can probably do a little Q&A video sometime soon with all of them. So definitely post up in the comments or post in the Discord, and I'll kind of collate those and yeah, just maybe make a little video out of it. So with that, if you want to keep supporting the channel, a good way to do that is to check out any description of any video. You'll see that you can kind of see my full free snowball portfolio link. The currently free link to the Discord. I'm still debating whether to basically gate this potentially behind the Patreon and YouTube membership, my free Blossom social profile, my paid portfolio spreadsheet tracker, same one that I use here on screen, and yeah, the Patreon and YouTube membership if you're interested. And if you appreciate the transparency and want to keep seeing more of this, hit the like and subscribe button and hit the bell notification if you want to be notified by future videos, and peace.